Today, I'm joined by Scott Porter, Managing Director at Cascadia Capital. Hi, Scott.
Hi, Kelly.
Scott, we'd love to hear some of your predictions for M&A in agtech and what's going to hot up or not. Which sectors can we expect to see more from?
Yeah. Thanks for the question. I think maybe I'll start broadly first. In 2021, we saw a roughly 40 to 50% increase in ag tech M&A transactions up from 2020. And I expect, and we expect more of the same for 2022. And there are a few trends that are really driving this. I think the first trend is the overall maturation of the ag tech industry. As we think about the cycles of venture-backed companies, we're beginning to approach the end of that first cycle or the end of their hold periods. And we believe we'll see in 2022 more investors looking to monetize the investments that they've made, particularly if they've been invested in a business for 7+ years. And as investors look to exit, oftentimes what we've seen as far as their exit of choice is going public, either through an IPO or through SPAC, or choosing M&A. And I think that really drives the second point of why M&A is going to be up in 2022, which is the poor public market performance and SPAC performance in 2021, we think will drive investors to increasingly seek M&A as an option. And that really plays well with what we're seeing from strategics in particular. And that's the third point. Commodity prices over the last couple of years have been strong and are staying strong. And as a result, the large ag strategics who are very acquisitive, oftentimes, they're performing quite well. Their earnings are up, their cash positions are up, and there's a renewed focus on pursuing M&A as a result. Last point I'll make on this is we are seeing more and more industry consolidators come into the market. And what I mean by that is a company or buyer that's coming in and looking at really good technology that hasn't necessarily been able to scale, but they may bring a differentiating aspect, whether they can bring multiple technologies together, whether they have a really good commercialization approach or capabilities. We're seeing more of those industry platforms come in and consolidate very good technologies, but maybe nascent technologies and combine them. I think what TELUS Agriculture, as an example, is doing in the ag tech space is a really interesting example to point to. They're really becoming a platform consolidator. And anytime you have platform consolidators in an industry, that's going to naturally drive more M&A. So I think all of that to say, we expect that 2022 will be a really strong year for ag tech M&A and possibly the strongest year we've ever seen in the markets.
That's fascinating. Thank you for sharing, and sounds really positive as to what's going to be happening for the rest of 22 as well. Yeah. And we've just learned that you've closed a deal for the sale of Plant Response. Could you give our audiences a bit more information about how this came about and share some of the details surrounding it, please?
Yeah, absolutely. I'd be happy to. So first, for those that don't know, Plant Response is an ag biologicals company building really a portfolio of solutions for growers to be able to maximize return on investment and crop yield. And I think this transaction is really symbolic of what I just spoke about in terms of seeing more M&A in 2022. First of all, they were a platform consolidator themselves. Plant Response was really the culmination of 4 or 5 different companies that had been acquired or merged in one way or another over the last few years into one business of Plant Response. Plant Response also had a really top-notch or blue chip cap table of investors that had been in the cap table for a long time. So you look at very prominent ag tech investors that were in this cap table, like Midland Capital, Bayer, Novozymes, Yara, Koch, Laird Norton, Second Avenue Partners, and the list goes on. But what you saw was a number of investors that had been invested in this business for a long period of time and were at a point in their cycle where it made sense to pursue an exit of the business. And then lastly, when the investors, when the company, when management looked at the macro trends that I just spoke of, that being that the strategics were performing very well, had a lot of cash, had maybe more robust M&A pipelines and a more robust M&A strategy, they felt like now was the time to look at an M&A transaction and maximize value. We ended up running a process of reaching out to a large set of both strategic and financial investors that had a demonstrated interest and knowledge of the biologicals market. And what we saw in that transaction was a significant amount of interest from global ag strategics. Think the Syngentas, the UPLs of the world, these large ag strategics that may not necessarily have their own biologicals platform today, but are looking at the direction and where the market is headed and saying now is the time for us to get into it in a bigger way. So as we spoke with these large ag strategics and buyers, the company ultimately selected Mosaic as the buyer. Mosaic, I think, was chosen as the buyer for a variety of reasons. But most importantly, I think they viewed Plant Response as a platform and a platform company to begin to build out their biological capabilities. I also expect, as it relates to Mosaic, that this will be the first of multiple acquisition Mosaic makes in the space. I don't think that they are done in terms of what they want to build in the biological sector. My belief is Plant Response will be the first potential acquisition of this ultimate platform in biologics that they want to build.
Fantastic. Well, congratulations to everyone involved, Plant Response, Mosaic. It's exciting to see what else is going to come out of the collaboration and what's yet to come. And just lastly, you're going to be joining our closing investor panel at the summit in San Francisco. Ahead of the conversation, can you tell us a bit about what lies ahead for the industry? How are investors building an investment thesis around the greatest challenges within ag?
Absolutely. So I think broadly speaking, investors and the ag tech industry on a whole over the last couple of years has seen what I would characterize as slower than expected adoption of the technologies, particularly in the cases where that technology is being sold or marketed to a farmer or producer. As a result, customer acquisition costs have been relatively high in these cases. And so I think in light of that dynamic, we're going to see three responses from investors as they really seek to solve challenges in ag, but also realize a good return on their investment. The first is I expect in 2022, we're going to see more investment in ag tech that is being driven bottoms up as opposed to top down. And so what I mean by that is technology that is that's being sold to the farmer, that's being requested by the farmer, will perform really well and will have a better adoption curve than technology that's being sold to the farmer and being driven top down by the consumer or the retailer. And so I expect that investors are really going to look for those technologies that are being sold to a farmer or producer and being demanded or requested by the farmer or producer. So a really good example of this is ag robotics and automated harvesting technologies. This remains the number one most requested form of innovation on the farm by farmers themselves. And as a result, we're seeing really good adoption rates for these technologies from farmers. And so sticking with this robotics and automated harvesting theme, I really think that companies like a Carbon Robotics, like a Burrow or Tortuga, that are really trying to alleviate a lot of the challenges farmers are having around rising labor costs, labor challenges or labor shortages, and combating yield and rising costs. I think on-farm robotics and automation really helps drive and fix the 1, 2, or 3 needs that farmers are having. So as a result, we expect to see more innovation and more investment in any technology that's selling to the farmer and has a bottoms-up sales or commercialization approach. The second trend I expect to see is more investment in the broader agri-food tech supply chain. We're seeing more interest from traditional ag tech investors in broader agri-food tech. So as an example, I think we may see less investment on the farm this year, but more investment in the supply chain around the farm. Another example, less investment in CEA, producers themselves, but more investment in the picks and shovels in CEA. And again, it goes back to that first trend that we're seeing slower adoption and slower sales cycles in companies that are selling to the farm. The last thing I'd mention is I think in these scenarios where there is good technology serving the farmer, but experiencing a slower adoption curve because of the way farmers adopt technology, it tends to be on a slower curve going forward. I think there's going to be a reset in valuation for these companies that are selling to the farmer at a slower adoption curve than what everyone initially expected. And I don't want to necessarily end on a dour note. So maybe I'll just add and end with, I think the reality at the end of the day from a macro perspective is food and ag represents a significant and meaningful makeup of our overall GDP. And it remains one of the least transformed sectors within technology. And the need for technology today to really transform the way we eat is significant.
Thank you for sharing that with us today. You can hear more about Scott's predictions at the World Agritech Summit this March, and we look forward to seeing you all there.